when I'm faced with horror situations while I'm trading, I seem to have developed an immunity to fear, which enables me to make the right decisions when they need to be made. Whether that's because I've trained or whether I was born with it, I don't know. But the fact of the matter is that my father was a vacuum cleaner repairman and mother was a nurse. So I don't think that I've come from a heritage of risk takers. So my argument is that if I can do this with a rather unique way of doing it, then I believe you can as well. But it boils down to that practice does not make perfect. Practice makes permanent. And if you carry on practicing the wrong way, you will merely establish a behavior pattern that doesn't serve you.
Welcome to today's feature on Tom Hougaard. Notice how he opens, not by talking about setups or indicators, but about fear. He claims he has trained himself to feel no fear when everything is going wrong, and that this is what lets him decide clearly when it matters most. He is not from a family of risk takers. His father fixed vacuum cleaners, and his mother was a nurse. So his point is simple. If he learned this, so can you. But the line that matters most is the one about practice. Most people assume that repetition leads to mastery. Tom flips that. Practice does not make perfect, it makes permanent. Repeat the wrong habits long enough, and you don't improve. You just lock in behavior that quietly works against you. That is where everything in this video begins. So, if this type of content is valuable to you, remember to like the video, subscribe to the channel, and enable notifications so you don't miss the upcoming lessons. And feel free to share in the comments which topics you would like us to explore in future videos. You will also find links to our trusted partners in the description below. Using those links helps support the channel and allows us to continue producing this kind of educational content. If fear and habit are the foundation, the next clip names the real problem out loud. Tom points to the broker's own numbers, 3 out of 4 traders losing, and draws a conclusion most people refuse to accept.
If there's 100 people in here, and 75 of them are losing, as it shows here on the CMC Market website, well, this is no longer a technical analysis issue. You're not a losing trader because you are deficient in MACD. And you're not running your losing positions because you don't understand stochastics or moving averages. This is not a technical analysis problem. This is a human problem. And the sooner that you accept that this is a human problem, the sooner you can actually do something about it.
This is the heart of what Tom is saying. When 75% of traders are losing, the problem cannot be MACD, stochastics, or moving averages. The math doesn't add up. It is not a technical problem, it is a human one. And the moment you accept that, you stop chasing a better indicator and start working on the only thing that actually changes your results: how you behave under pressure. If the problem is human, then much of what traders cling to is just a way to feel in control. The next clip goes after one of the biggest illusions of all, the belief that anyone can know where the market is going.
But it's really not so interesting to know whether this is a winning trade or a losing trade. Maybe I'm right, maybe I am wrong. It really does depend on how many traders out there agrees with me and they back up my trade as well by being a buyers when I'm buying or being sellers as I am selling. So, since I have no knowledge of the future, whenever people ask me, where do you think gold is going? Where do you think so-and-so is going? I say, you know what, come back to me next week. My crystal ball is out for repair. It's a facetious way of telling people to stop bugging me about where I think the market is going, because I am not Nostradamus. I have absolutely no idea. And anyone who says they think that the market is going this way or that way is because they have a vested interest or a bias towards a direction or another. And that's quite fair. If you're long Bitcoin, of course you're going to say that the Bitcoin is going to go up and you think it's going to go up. You wouldn't say, I think Bitcoin's going down, and then you're long Bitcoin. The opinion is biased from their own position.
Tom makes the point with humor, telling people his crystal ball is out for repair. But the message is serious. He has no idea where gold, Bitcoin, or anything else is going next, and neither does anyone else. When someone tells you a market is going up, it is usually because they are already long. The opinion is just their position talking. Letting go of that need to predict is not a weakness. It's what frees you to react to what the market actually does. If predicting is off the table, then what does a professional actually rely on? The next clip gives an answer that surprises most people, especially coming from someone who trades for a living.
If my entries are purely random and I'm a professional trader, and you may think, oh, as a professional trader, you may have a hit rate around the 80%, the 90%. Oh no, I most certainly do not have a hit rate in the 80s or in the 90s. In fact, you could even argue that I would have a better hit rate if I simply flipped a coin and then I applied money management. So either way, the sooner I accept that the nature of what I am doing is basically random, the sooner I can begin to trade as trading should be done.
Here, Tom says something almost no one expects. His entries are close to random, and his hit rate is nowhere near the 80 or 90% people imagine. He even jokes that a coin flip might do better. The edge is not in being right, it is in accepting the randomness and applying strict money management on top of it. Once you stop needing every trade to be correct, you can finally trade the way trading is meant to be done. If even a professional treats entries as merely random, then the search for a perfect system starts to look like a trap. The next clip confronts that directly and points at the real obstacle.
I am quite happy to sitting devouring endless reams of stock charts that I analyze purely to train my mind. But I'm also fully aware of the way my mind works. And my mind is not my best friend when it comes to highly profitable trading. So I don't believe for 1 second that charts is the holy grail, any more than I think fundamental analysis is the holy grail. See, the problem here is, ladies and gentlemen, that we have a brain which is at best chaotic and at worst just our worst enemy. And one of the little intricacies of our brains is that it has a tendency to see things that aren't there.
Tom is clear that charts are no holy grail, and neither is fundamental analysis. He studies charts endlessly, but he does it to train his mind, not because he believes they hold a secret. The real problem sits between our ears. The brain is chaotic, sometimes our own worst enemy, and it has a habit of seeing things that simply are not there. The traders who last are the ones who stay suspicious of their own perception. This naturally leads to the final point. If the indicators aren't the answer, and the mind is the obstacle, then where does a real edge come from?
When a market makes a 61% retracement, some would argue that this is the ideal time to either buy or sell short depending on the direction. And if that fails, then there's also the 78.6% retracement. And hell, why not throw the 88.6 and the 94.5% ratio? So there's always a ratio for the particular season. However, my argument is that if the market has already traded up to a 78% retracement, surely if you sell short at 78.6, you're actually betting against the prevailing trend. Some would argue against me. I'm not really so interested in what other people are thinking. I am more interested in trying to explain to you that the majority of indicators are available to the majority of people. Yet, considering that 75 to 80%, maybe 90% of all people engaged in trading are losing, maybe it's a time we have a real long, hard look at what it is that we're actually doing when we're trading.
Tom closes the loop here. The retracement levels, the ratios, the indicators, all of it is available to everyone, yet most traders still lose. So the answer was never in the tools. It is in the willingness to take an honest look at what we are actually doing when we trade. By understanding how the brain reacts under pressure and questioning our own behavior, we stop repeating the same emotional mistakes. That awareness, more than any indicator, is the real edge. And before we wrap up, let's take a moment to turn all these lessons into something you can actually apply. The 6 core principles inspired by Tom Hougaard's teachings. Step 1. Train your relationship with fear. Every trading decision is shaped by how you handle pressure. Tom built an immunity to fear through conditioning, not luck. Learn to notice when fear is making the decision for you, and remember his warning. Practice does not make perfect, it makes permanent. Repeat the wrong response long enough, and it becomes automatic. Step 2. Accept that it is a human problem. When most traders are losing, the issue is not MACD, stochastics, or moving averages. The math proves it is not technical, it is human. The sooner you accept that, the sooner you stop chasing a better indicator and start working on the only variable that truly moves your results. Step 3. Let go of prediction. Nobody knows where the market is going, and pretending otherwise is just bias dressed as conviction. When someone tells you a market is going up, it is usually their position talking. Tom's crystal ball is permanently out for repair, and that freedom from forecasting is exactly what lets him react to what the market actually does. Step 4. Embrace randomness and manage your money. Even a professional like Tom treats his entries as merely random, with a hit rate far below what people imagine. The edge is not in being right more often. It is in accepting the randomness and applying strict money management on top of it. Stop tying your identity to every trade, and discipline strengthens on its own. Step 5. Drop the search for a holy grail. There is no secret in charts or in fundamentals. Tom studies charts to train his mind, not to find a magic answer. The real obstacle is the brain itself, chaotic and prone to seeing patterns that are not there. Stay simple, stay suspicious of your own perception, and focus on what actually works in real time. Step 6. Stay present and build awareness. The retracement levels, the ratios, the indicators, all of it is available to everyone. Yet most traders still lose. So the edge was never in the tools. It comes from staying conscious under pressure and honestly questioning what you are really doing when you trade. Awareness and presence are what keep you from repeating the same emotional mistakes. And that is the essence of Tom Hougaard's message. Master your fear. Accept that trading is a human game. Let go of prediction. Respect randomness. And build a process grounded in awareness that lasts over time. So, trader, if this video helped you gain more clarity, make sure to like the video, subscribe to the channel, and turn on notifications so you do not miss the next lessons. And let me know in the comments which topics you would like us to explore in future videos. If you want to go deeper with exclusive content, early access to videos, and additional tools to support your development, consider joining the ComLucro Trader community right here on YouTube. It's a simple way to support the channel and a smart investment in your growth as a trader. You will also find links to our trusted partners in the description below. Using those links helps support the channel and allows us to keep producing this kind of educational content. Please also remember that the mission of the ComLucro channel is simple. We help traders build clarity, confidence, and structure, so every decision is made with discipline and intention. Here you will find complete courses designed as a true trading masterclass. We teach liquidity, market structure, higher time frame analysis, and supply and demand, always focused on understanding price and executing with a professional mindset. We also cover trading psychology, risk management, and long-term consistency, because trading is not just about charts. It is about mindset, discipline, and execution over time. Our main courses include Smart Money Concepts, ICT, Technical Analysis, Trading Psychology, and Wyckoff. Alongside that, we share insights from respected traders whose work helps you better understand how markets really behave. Thanks for watching, and I will see you in the next video.